Hey guys, and welcome to today's video. So today's video we're going to be talking about debt. We're going to be talking about private debt and corporate debt and how that will cause more unemployment in the future. So without further ado guys, let's do this! Alright guys, welcome back. So how does corporate debt relate to unemployment? Well, let me take you through it. So the thing is, yields on the Treasury and the Government of Canada bonds, so basically Treasuries are US government bonds, Government of Canada bonds are what they say on the tin. So essentially they have gone up lots to the point now where they're actually sat at highs not seen since 2019, before all this stuff with the Cerveza came around. So the thing is, they are sat at highs and investors are now looking at buying those as opposed to getting into stuff which is more risky, like junk debt and corporate debt. And the thing is, corporations are having real trouble now refinancing their debt as it rolls over. They're trying to roll over short-term, long-term debt, and they're having trouble doing so because the fact is the yields are also going up on their debt, and a lot of them aren't going to be able to afford the repayments. Now, a lot of them are going to be able to afford those repayments, but guess what that does? It puts more pressure on their balance sheet now because they have to spend way more money on interest payments, especially if they've accumulated a lot of debt, which we know they did because we talked about it in the video, which is how Canada avoided 2008, which you can go watch right there at the end of this video. I'll link it too. So the thing is, guys, they've gorged on this debt during 2020 and 2021, and the investors gobbled it up. They were more than happy to buy it because the yields they were getting on Treasuries and Government of Canada bonds were so low that they needed to find a yield for their pension funds. So the thing is, now it's becoming really troubling for these corporations because they're in a point where now they've got to pay a lot more money on their debt. They've also got inflation rising. I mean, imagine you're a company and you manufacture, let's say, phone cases, for example. And now I know this is a really bad example, but let's just keep it simple here. Imagine all your costs have gone up 20%. And you know that if you raise your prices by 20%, everybody's going to buy from a competitor. That basically means that you can't raise your prices even though your costs have gone up. And this is a dilemma many businesses are facing. And this is why I've reiterated the whole time during all of my videos that it doesn't matter really whether the central banks raise rates or not. The damage that inflation has already done is going to become evident within the next 6 to 12 months. It will start to take its toll on the economy, and you will see that happening in real time, even if they don't increase interest rates. Now, increasing interest rates is just pouring gasoline onto that fire, which is the economy which is dying, essentially. I don't want to say it's burning hot. That implies that it's doing really well. So, but they're going to pour gasoline on that and they're going to burn it to the ground. And the thing is, the reason why is they always do this, guys. This is exactly what they did in 2020. They came out, they dropped interest rates to the floor, and then they left it too low for way too long. I've been saying since May last year that they needed to raise rates, but they won't. That they will continue and continue to wait and wait and wait until it's finally too late, and then they will start raising rates. You know how I know that? It's not because I'm a magician. It's not because I'm smart, because I'm not. The thing is, I know that because history always repeats itself. They're Keynesian economists, and they do exactly the same thing over and over again. They keep repeating themselves. So the thing is, how does this relate to unemployment? Well, imagine you've got the cost of your debt, servicing that debt is going up. You've also got inflation costs that you can't pass on to your consumers. And then you also have all these people that you've got to pay each month. Well, eventually it gets to a point where you've got to shrink your costs. And the biggest thing that people are going to go to first, I guarantee you, is staff. They're going to look to cut staff down, and that creates more unemployment. Now, this is just how recessions essentially start, is the unemployment rate goes up. The funny thing is, guys, Canada's unemployment isn't that good now anyway. So it going up from here, it doesn't really stand much of a chance. Now, the thing is, we often talk about real estate and everything to do with real estate on this channel. But the thing is, guys, you really need to pay attention more to the overall economy than just focusing on real estate like we do on this channel. We have to look at the overall economy and what's happening. Because if the engine is falling apart, then really that's what we need to be looking at. And that's exactly what's happening right now. So the thing is, there's going to be more job losses. And what happened in 2020 when you saw those ridiculously high unemployment rates that happened all over the country, that was actually a preview of what's to come. Let me explain why. The thing is, the companies that laid people off in 2020, they laid people off in 2020 because they didn't have the balance sheet capacity to keep the operations going or to keep funding those operations. So you know what's going to happen? Those same companies are going to face the same dilemma again, but this time the government's not going to be helping them. It's going to be doing the opposite, like punching them in the face. Exactly. So this is really going to happen. I know a lot of people don't think it is. They're too naive about the whole situation in the economy right now. I mean, anybody who thinks this economy is good has lost their mind. But you have to remember, the central banks and the government, they think it's good, but they don't live in the real world. And these people, they always make the same mistakes. And the Bank of Canada revised its GDP forecast to show huge declines in housing-related investments. So why is that? They know that what they're about to embark on is going to affect the economy. They're not stupid, but they think the economy's solid. They think they're doing this and the economy is rock solid, you know? But it's the complete opposite. And that's exactly how the currency markets have been reacting with the Canadian dollar. That's why the last time oil was at $94 a barrel, the Canadian dollar was trading around 98 cents. So at the end of the day, guys, this is gonna happen. Like, it has to play itself out. You have to just realize that lowering rates and issuing bank reserves, it just buys you time. You're essentially making it worse, because if you're issuing more debt to people who aren't going to pay it back, that's not a good thing to do, guys. If somebody is telling you, who you lent $5,000, hey, it looks likely that I'm not going to be able to pay you back, but can you lend me another $5,000? You're going to go no. Even if your bank is going, we'll lend you that $5,000, no problem. But that's essentially what the banks do. The banks just go, that's easy money for us. We'll just lend the guy $5,000. We'll make the money off it. We know that in the end of the day, the taxpayer is going to come along, bail us out. We're too big to fail. So we hold all the cards here. So we don't really care. And the banks are only concerned about short term, and this is part of the problem with the whole financial system and why it's so messed up in the first place, is everybody is just looking at short term. The politicians, the central banks, the banking system and the banking CEOs, they're all just looking at short term. How can I make my bonus the biggest I can possibly make it? I don't really care about 10 years because I'm not going to be around by then, or I will have made so much money, I don't really care when it all comes crashing down. That's the kind of mindset that these people have. And it's the same with the politicians. They're just like, I don't care because you know what? I only care about the next 3 years because after I've done my certain amount of terms, guess what? I don't really care anymore. And that is so true to this day. But the thing is, guys, just keep an eye on private debt, because if we start to see it go down, then that is a bad sign. So we're going to keep an eye on it, see what happens. And we're also going to keep an eye on household debt, because again, if that starts to go down, again, that is a bad thing. So anyway, guys, I will see you in the next video. Thank you so much for watching. Thanks for supporting the channel. Please give it a like, subscribe to the channel if you want to. I'll see you in the next video. Peace and love, guys. Bye-bye.